And as we go forward, I'm going to say it again, the AI mid-cycle slowdown is basically the peak and the easy money of AI. And so if the money starts filtering back towards the other direction, I've laid out a pretty bullish case for Bitcoin if you haven't got it. If we're overestimating the inflation side and productivity is coming, if we're overestimating the hawkishness of the Fed from what Warsh said, and at the same time, the AI trade is not going to lose its earnings growth. It's just going to make it more difficult for institutions to stay long it the way they have in the past. Then all of a sudden, the lower volatility of Bitcoin will probably lead in. If we get above the 200-day moving average with everything that I just said, which is up north of 70 at this point, I do think that that's going to be the beginning of the next phase of crypto and the next phase of AI. We'll see if it happens in the second half of the year. I think it will.
Bitcoin just crashed to new lows. And somehow, that's the best news it's had all year. Bitcoin just gave traders something to talk about. New lows below recent support. New low below the February floor. And yet it held its ground. Jordi Visser says these are the first genuinely encouraging technical signs Bitcoin has flashed in months. He calls it a positive divergence, a classic sign that a stronger foundation could be formed underneath the price action. Here's the setup. Bitcoin has been fighting to reclaim $60,000 all weekend. Chart watchers are buzzing. The RSI is flashing a bullish divergence, eerily like the one that marked the bottom of the 2022 bear market. Analysts are calling the buyer defense at $60,000 encouraging. Some traders still think new lows are coming, but not until August, if they come at all. Visser breaks down why this year has been brutal for Bitcoin. Early on, it got lumped in with software stocks, dragging down every time its sector dropped. Since October 2025 high was nearly $126,000, Bitcoin has been stuck in a grinding, nearly year-long pullback. Two forces are to blame: heavy net outflows from spot ETFs and mounting disappointment over interest rate cuts that never delivered. But here's the twist. Visser says Bitcoin's outlook is about to get a lot more attractive. Why? Because the AI sector is entering what he calls a mid-cycle slowdown. He flagged this weeks ago, and most investors brushed it off. They might not be able to ignore it much longer. If this kind of breakdown helps you see the market more clearly, subscribe now. Help us hit 1,000.
This has been a bad year for Bitcoin with a lot of headwinds, starting with software, which we talked about a lot at the beginning of the year and how it got lumped in with everything that was built on code. Once the software stuff kind of bottomed, you got into what you said, which is complete agreement. A country like Korea, which was part of the energy for Bitcoin, moved everything into basically memory, and we've seen massive leverage and margin debt and everything else. So Bitcoin, which was always kind of the place you'd go to if you wanted to trade beta relative to tech, well, that ended, and everyone now has beta in tech where you can get 10 baggers in the span of a year. I'm just going to tell people technically, we've got some nice divergences finally. We made new lows in Bitcoin, not just from the lows from a couple weeks ago, but also the lows from back in February, and it held in there. We've seen a lot of selling in the Bitcoin ETFs. So I'm more interested in paying attention now. Like I've said, until it gets above the 200-day, I don't think it's worthwhile for people to play on the other side. But I do think the narrative is old, and now I've been able to find something where if the wage side doesn't improve, meaning if we don't get a big change and we get I think any weakness now that starts to show up from AI agents, I think is going to be a positive for Bitcoin. Well, this is where the story gets very good for Bitcoin. So about 4 weeks ago, I talked and I started doing videos on the AI mid-cycle slowdown. I don't think people really listened to me. I don't think they really cared, but these names have been hit pretty hard and they're going through a slowdown. The reason they're going through a slowdown, these headwinds are never going away. So let me rephrase that. These headwinds are never going away. So I think people have to adjust their expectations. And this goes for Korea. This goes for Micron. This goes for everything. We talked about Micron having blowout numbers last week. Stock is down a decent amount since that report. That was the high. When you sell off on great news, that is not a good sign, and you have to dig a little deep. The reason these headwinds or that we're at a point is The headwinds are real. The government shut down one of the models. The Korean models are catching up. We're at a stage where the governments are getting more involved. This is a headwind that people have to understand. If governments are getting more involved with companies, Sam Altman proposed a 5% stake to the White House. I think we're getting back into what Bitcoin was meant to represent, which is when the government gets too involved in the capital markets, in the fiat system, in the ability to make money in these things, which is what happens when you shut down the models, when you slow down. On the data center side, we are absolutely having problems getting data centers in. This is, again, about politics. You've got a lot of people spending a lot of money in these elections. On the social democrat side, they are doing everything they can. On the Republican side and on the tech side, they're doing everything they can. We are at a point now where I think people have to realize that AI is a disruptive force and the models from here only get better. So what I was talking about in the first quarter, we're not going to see that easy trade again. It's not coming. And so the benefits are going to be to the companies that are able to use the agentic side and get their margins up. And we're starting to see healthcare stocks and financial stocks start to outperform the market. And that's why we're seeing this rotation, because tech has been the big winner. The infrastructure has been the big winner. I still think over the next 5 years, you're going to get great returns in these things because the build that is going to happen. It's just not going to be as easy. And I think that's good for Bitcoin.
What if the AI boom's biggest weakness is exactly what Bitcoin needs to explode? Jordi Visser thinks that's exactly what's happening. He says Bitcoin could become the best performing asset once the cracks in the AI boom become impossible to ignore. His reasoning is simple. Bitcoin struggles whenever investors can easily bank extraordinary returns of 100% to 1,000% from high-growth tech stocks. When that easy money dries up, capital has nowhere to go but somewhere new. And that shift looks like it's already starting. AI standard bearers are losing steam. While Bitcoin rebounds hard from its lowest level in almost 2 years, now trading near $61,779.89. The story is changing in real time. Money is rotating away from AI infrastructure and straight into digital assets. Visser doesn't think this is the end of AI. He calls it the end of the easy money phase. He's watching 3 signals closely: inflation continuing to cool, the Federal Reserve turning less hawkish, and Bitcoin breaking above its 200-day moving average. Line those 3 up, and Visser says it could mark the start of the next major phase for Bitcoin and the entire crypto market, possibly by the second half of the year. Here's the big one. Visser sees July into August as potentially the best buying the dip window of the next 3 years. July becomes the real test. Can the bulls use seasonal strength to reclaim the 200-week SMA? Let's get back to the interview.
So on the S&P 500, again, as of today, you're probably up about 8 and a little bit percent, maybe a little bit less, 8 and change is my guess, which is a little surprising given the fact that earnings are up as much as they are. But I think in the case of the S&P, it is a cap-weighted index, and you suffer with cap weightings and the fact that you're heavily weighted towards the winners of the prior 15 years and you're underweight the losers. Well, if the semiconductors are winning and they were not the winners and the hyperscalers are losing, then you're suffering in that side. I still believe stocks are going to outperform bonds for at least the next couple of years until AGI starts to become a little bit more scary. I still believe that commodities are going to be a big necessary, including silver. And I still believe that Bitcoin is going to be the best performer out of all of them once we get to the point that the negatives of AI start to become apparent. And I think they're becoming apparent right now. If the best you can get from the S&P 500 is just a guess, or Qs is 15% a year. Well, that's the world that Bitcoin thrives in. If you can get 100 to 1,000%, which is the world we've been living in for retail, which is the energy of Bitcoin, well, then Bitcoin's going to suffer. I think that world's going away. And more importantly, for people that are invested in private credit, in private debt, which wealthy people are in real estate, I think gradually over time, especially when the S&P starts to run into some bigger resistance, the volatility now is in the equity market. I've shown this repeatedly. Remember when Bitcoin was such an extreme volatile position? Well, now when Bitcoin has a big down day, it's down 1.5%. So it's moving on a 30 vol. not even a 30 vol using that. I'm telling you right now, the tech momentum index, the last 60 days is an 85 vol. That's higher than any time over the last 25 years, including the dot-com bubble. Now, a momentum index like that is long short. So that has the winners of tech over the losers of tech. Well, that's the way most hedge funds run their book. When you have an 80 volatility, that prevents you from having much of a position in that because you'd be hitting your drawdown limits very quickly if you had that trade on. This is what's happening in the equity market, and this is not something that people should minimize. In fact, I've shown that over the last year, it's been a megaphone, meaning we're making higher and higher and higher volatility bands as we move forward. And that's going to make it more difficult for people to be long stocks. The Sharpe ratios are going down. And as we go forward, I'm going to say it again, the AI mid-cycle slowdown is basically the peak and the easy money of AI. And so if the money starts filtering back towards the other direction, I've laid out a pretty bullish case for Bitcoin if you haven't got it. If we're overestimating the inflation side and productivity is coming, if we're overestimating the hawkishness of the Fed from what Warsh said, and at the same time, the AI trade is not going to lose its earnings growth. It's just going to make it more difficult for institutions to stay long it the way they have in the past. Then all of a sudden, the lower volatility of Bitcoin will probably lead in. If we get above the 200-day moving average with everything that I just said, which is up north of 70 at this point, I do think that that's going to be the beginning of the next phase of crypto and the next phase of AI. We'll see if it happens in the second half of the year. I think it will.
Bitcoin could be entering a powerful new chapter as the AI market moves beyond its easiest gains and investors begin looking for fresh opportunities. If AI growth becomes steadier, market volatility stays high, and Bitcoin continues building strength, confidence could return quickly. For investors, the months ahead may reveal whether Bitcoin becomes the leading asset in this changing cycle, while AI continues to reshape the future in a more balanced and sustainable way. Do you think Bitcoin will benefit as the AI trade slows down, or will AI remain the market's biggest winner? Share your thoughts in the comments below. If you enjoyed this analysis, don't forget to like, subscribe, and turn on notifications for more Bitcoin insights. Thanks for watching, and we'll see you in the next video.